Good morning, this is Justin Harper from IG Markets with the Forex focus from Singapore on Thursday, July the 26th. The euro has moved back above the 121 level today after comments from ECB member Novotny, who was discussing the issue of the European Stability Mechanism gaining a banking licence. The practicalities of this would mean that it would be allowed to lend money much easier to worried European economies such as Spain, Portugal and Italy. This lifted market sentiment last night and saw the single currency scrape itself off its two-year low. However, things are pretty tense around the Eurozone, and with Spain and Greece in the firing line, Italy is also starting to show some panicking signs with yields going up. This is likely to test the euro. However, it's actually surprised with its resilience, failing to break below the 120 level, which it fell through back in 2010. On the opposite end of the spectrum, we look at the Aussie, which has actually rallied against the US dollar as fears of another interest rate cut have subsided a little bit there. The Aussie, of course, is the currency of choice for yield-hungry investors and governments and sovereign wealth funds. The Australian dollar has actually gained about 7% since it fell below parity with the US dollar, and this morning it sits up at 1032. If we look at the yen's been pretty unexciting against the US dollar, stuck in a rut around the 78 handle. However, the continuing strength of the Japanese currency has wobbled the markets in Japan, and the Nikkei slipped quite a bit yesterday on these fears that Japanese exporters will be hit hard by the strong yen. So we could see some intervention from Bank of Japan.